Hey everyone, welcome back to my channel. Today we are going to be talking about closing costs. So, when I meet with the buyer on the initial conversations, we're usually talking about how much do we have budgeted for a down payment. And a very common response from a buyer is, I've got 5% down, or I've got 3% down, or I've got 10% down, or 20% down. That's the down payment percentage, right? And so, one of the things that we're typically talking about after that is, okay, well, in addition to your 3%, 5%, 10%, 20%, whatever your down payment percentage is, in addition to that, we also have closing costs and prepaid expenses, which are additional costs associated with getting your mortgage loan on top of that down payment percentage. Um, so many people are surprised by that. So let's talk more about closing costs. So I'm going to read an exact definition. Closing costs are the fees and expenses associated with buying a home that you'll pay at the closing table. Now, typically these are between 2% and 5% of the loan amount, but it can fluctuate just depending on your specific situation, where rates are that day, what your credit score looks like, what type of loan program you're doing, etc. Let's break down a few of the most common types of closing costs that you might encounter. First one's the appraisal fee. Most mortgage loans need an appraisal done, so you'll have that fee to deal with. Then title insurance fees. There's a lender's title insurance policy. There's an owner's title insurance policy. Most title companies charge a closing fee or maybe a notary fee. So there's going to be title fees involved. Origination fee. So lenders are going to charge a fee for origination. Sometimes that includes processing. Sometimes it includes underwriting as well. It's hard when we talk with buyers. A lot of times they're talking to maybe 2 or 3 different lenders, and all of those different lenders disclose their closing costs a little bit differently. That's common for different lenders to disclose closing costs differently, but it's up to the buyer and a good loan officer to help decipher, what those costs actually are, what they mean, where they're coming from. Closing costs nonetheless. Prepaid interest is also a closing cost. So when you close on a mortgage in a certain month, you don't have a mortgage payment on the first day of the next month. It will actually be due the following month, but you will have to pay interest from the day that you close to the first day of the next month. So that prepaid interest amount would be higher if you close early in the month. It would be lower if you close later in the month. Another one is points, buy down points. These are also called discount points as well. These are upfront costs associated with buying your interest rate down. So that could be a closing cost that you face as well. So, closing costs are important because it's an amount that you want to account for on top of your down payment percentage that you have budgeted. It can also it can impact the overall cost of the mortgage. So when we're looking at APR, the annual percentage rate, which is different than the interest rate, that APR is going to be impacted by the amount of closing costs that you pay. In some situations, you can roll your closing costs into your mortgage through the interest rate. Depending on where rates are and where your credit scores are, this could be a good option for you. It's almost a form of down payment assistance, going with a higher interest rate to get lender credits to cover your closing costs. In some situations, we saw this towards the end of 2022, when the market was a little bit slower. We were able to get the seller to pay closing costs. The seller can absolutely pay closing costs. It's just, can you negotiate that? In a slower market where maybe there's not multiple offers, you can get the seller to pay closing costs. Shoot, you can even do the seller to pay a temporary rate buy down. That will be for a different video. But when you're preparing for closing costs, I'm biased. I mean, I think the best way to prepare for a mortgage loan is to talk to a good mortgage loan officer like myself. I would love to help anyone who's interested in this, but my advice would be to talk to a lender and find out what their closing costs are. Find out if there's ways to roll it into the mortgage. Find out if there's down payment assistance programs that can pay the closing costs. Get expert advice from a real estate agent or from a loan officer to find out if the sellers are paying closing costs in your market. That would be, a good way to prepare. Another thing to keep in mind is that the closing costs aren't the only expenses when you encounter a home. I mentioned, prepaid expenses. Those are the expenses to build your escrow accounts at closing. Typically, you have to pay a few months worth of property taxes and homeowners insurance to build escrow accounts. You also have to pay a year up front for your homeowners insurance in advance at closing. So the way that I always show numbers is we'll look at down payment percentage, and then we'll look at all of the closing costs itemized out, and then all of the prepaid expenses itemized out, so that you can actually get a clear target budget for exactly how much money you're going to need for your total cash to close, all in. Let's see what other notes I have. When it comes to down payments, the amount you'll need will depend on the type of loan that you're getting. I mentioned that before. You also want to think about home inspections as well. This is something that no lender is going to put on their closing cost worksheet just because an inspection isn't required for you to get the loan, but it is definitely something that you're going to want to do. A good real estate agent will have good inspectors that they'll refer. I've got good inspectors that I know as well. The cost of the inspection is going to fluctuate based on exactly what type of inspection that you're getting. So that's another cost to keep in mind as well. And then I'll just throw out there earnest money. Earnest money is not a closing cost, but it is a part of your down payment that you're putting down at the beginning of the process. It will go towards your down payment. So when you're thinking about earnest money, it's not in addition to the cash to close that your lender is showing you. It's just part of it. So I wanted to throw that out there as well. So in conclusion, I want to wrap up this video. Thank you for watching and learning more about closing costs. We hope that this is helpful for you. Remember to budget for your closing costs and your down payment and your prepaid expenses as well. And if you have any questions, feel free to message me or comment on this video. I'd love to help in any way. Thanks so much.